Pay me, pay me, pay me my silver now. Pay me or go to jail. Pay me my silver now.
RoadToRuta.com. It is the day before the election. I do expect quite a bit of chaos in the next couple of weeks. Election delays. You know, ever since we implemented voting by machine, we can't get all the vote in, supposedly. It's so insane right now. Denver warns of election results delays due to ballot crush. Everybody's saying it's not going to be decided on the day. Gives them more time to cheat, lie, steal, you name it. Whoever's losing is going to do everything they can to win. Whoever's winning is going to cry foul. It is a mess, and it's going to be a mess. It's going to stay a mess. This is all part of the plan. So get your physical silver in your own possession now. I got some good silver stuff coming up here. Currently, silver is at $32.50, being held there artificially by the derivative market. We all know how the game is played. If you look at the 100-day moving averages, this is the old game, and they have not been able to slam it below the 100-day or the 200-day. I think they can get it under, but they're running into a problem in that India is buying everything under the 100-day now, as we saw in August and September. That's a problem because it's all down to physical metal now. Who's got the physical metal when the lights go out? And I think the lights could go out very soon. I do think there's going to be cyber attacks between now and the end of the before inauguration, major ones. As in, you won't know what the hell is going on. Don't forget, we get most of our news from the internet these days. Yeah, and without the internet, we're screwed as a civilization because we put so much reliance upon it, and it is fairly fragile. Keep that in mind. And the Department of Homeland Security said China has the ability to turn off power grids and things like that. With their hackers. It's scary, I know. And they're putting out all kinds of stuff about we're going to have full military presence in the time frame between the voting and the inauguration. No matter who wins, the other side is not going to be satisfied. It's going to be cries of, it's just going to be so embarrassing. You think it's embarrassing now. You wait for Election Day and what happens after Election Day, and our country has literally gone to the dogs. The dogs. So hang tight. One thing I want to point out for those of you who think the price of silver currently trading at 70% of its all-time high in 1980. If you think that price is price suppressed, you are correct. And here's another. I went on ChatGPT and I wanted to do some discussion, have a discussion with ChatGPT, and like every chatbot internet thing, it's highly skewed to those who create it, even AI. So just keep that in mind. But one of the things I've been talking about for years is don't look at price, look at the gold-silver ratio. And we all know that gold's up over 3 times its all-time high, approaching 4 times its all-time high from 1980. It'll hit, what's that, $3,200. Would be the 4 times high, and silver again hasn't even reached its high. So I asked questions in troy ounces. How much physical silver is held in ETFs, and how much physical gold? What is the silver gold ratio in these ETFs? This is what ChatGPT said. As of the latest available data, physically backed ETFs hold approximately 83 million troy ounces of gold and around 547 million ounces of troy silver. That gives you a gold-silver ratio of 6.59. Really interesting because that's what it's coming out of the ground at the mines, about 6 to 7. And this is exactly on that. So then I asked, how about the same question with proven physical silver and gold deposits in the ground? As of 2023, global reserves of silver and gold are estimated to be the following. Silver at 610,000 metric tons, and gold at approximately 53,000 metric tons, which gives us a ratio of 11.5 to 1. So that's, even a little stronger for those people thinking, yeah, don't worry, it's all on the ground. It's in the ground at 11.5 to 1. Nothing near the 84 to 1 that we currently see on price. And then I asked the same question for physical silver and physical gold above ground. I mean, how many times do we have to say, what should the gold silver ratio be based on? In the past, it was always above ground and then secondly, below ground. And that just makes sense, right? It should make sense. As of 2023, the estimated above ground stocks of precious metals are gold, approximately 6.84 billion troy ounces, silver, approximately 51.5 billion troy ounces, which is not true, by the way. Let's just say it is true, but remember that all the silver that's been mined, the vast majority of it is gone. It's still on the planet. It got put into cell phones and flat screen TVs and solar panels, and got thrown away into garbage heaps. And but the above ground ratio, even if you add all that back in, because gold you pretty much save and silver you pretty much throw away, it's still a ratio of 7.5 to 1, which is crazy. And then I asked the same question for above ground physical silver and physical gold that could be available to investors to purchase. This is more interesting. Estimating the exact quantities above ground physical gold and silver available for investment is challenging due to the varying definitions and reporting standards. However, based on the available data, the World Gold Council estimates that approximately 209,000 metric tons of gold have been mined throughout history. It's about 21%, 43 million, 1.38 billion ounces held in the form of coins and bars, which are typically considered investable assets. With silver, it's 1.6 million metric tons. However, it says, the amount specifically available is not distinctly specified in the provided data. And look who is providing the data, CPM Group. CPM Group is the company run by Jeffrey Christian, who works for the banking cabal. So I'm like, okay, let's just forget about Jeff, because we know what Jeff's agenda is. It should be obvious to everybody. I said, do the same question, but do not use any data from CPM Group. Because CPM Group says, oh yeah, it's just massive amounts of silver available. He's full of shit. So not using the CPM Group, they actually came up with an answer. Estimating the exact quantities of above ground physical gold and silver are available for investment is challenging due to varying definitions and reporting standards. However, based on the data, the World Gold Council estimates that approximately 209,000 metric tons of gold have been mined throughout history. This is about 21% is held in the form of coins and bars. So they're at 1.38 billion ounces. Silver, according to Kitco, the above-ground silver bullion holdings are estimated between 3 to 3.5 billion troy ounces. I would say that's pretty close to what should be up there in investable. This includes private bullion bars and coins, exchange-traded silver funds, and futures exchange warehouses. I hope that exchange-traded silver funds is the warehouses for that. Anyway, that puts the silver-gold ratio at 2.54 to 1. Now we're getting somewhere. So, not counting Jeffrey Christian's data, the gold-to-silver ratio above ground investable gold and silver is about 2.5 to 1. And we're currently trading at 84 to 1. So I asked, what is the average current gold-silver ratio on all major silver and gold exchanges? And they came up with 83.8 to 1. I said, I'm trying to reason with it. It seems the exchange price ratio is not in line with the physical metal availability ratios. Besides the current exchange price for gold and silver, is there any comparative data that justifies the 83.8 price ratio? And then it goes into current price ratio, blah, blah, blah. The ratio is influenced by market dynamics. Gold is often viewed as a safe haven asset. Gold attracts investors during economic uncertainty, political tensions, or inflationary periods. We're at all that right now. Recent record high in gold prices have been driven by such factors. And then silver, listen to this. while also a precious metal, so all the above factors count for silver. Silver has significant industrial applications as well, including electronics and solar panels. This dual role means its price is influenced by both investment demand and industrial consumption. Recent surges in silver prices have been attributed to strong industrial demand and supply deficits. Supply dynamics. Global gold production has remained relatively stable, with central banks holding substantial reserves. Silver. Now they go to the Silver Institute. That's the problem, is the people reporting on silver don't have silver's best interest in mind, silver investors. The Silver Institute reports a supply deficit persisting for the past 3 years, with another shortfall predicted this year. Low mine production and increased demand have contributed to this deficit. Historical context. Historically, gold and silver ratio has fluctuated, often ranging between 50 and 80. A higher ratio suggests that silver is relatively undervalued compared to gold, while a lower ratio indicates the opposite. I said, thank you for the information, but it didn't answer my question. Clearly, the physical metal data is suggestive of a ratio well below 10 to 1, and yet the current price ratio is 80 to 1. Here's the question again. Besides the current exchange price for silver and gold, is there any comparative physical metal data that justifies the 83.8 price ratio? And it gave me the exact same answer. I said, you gave me the exact same non-answer. Are you saying that there is no physical supply-demand data to justify the current 83.8 price ratio? And it gave me the same answer again. I said, same answer again. Moving on. Make the argument for silver-gold ratio being out of whack due to significant price suppression on the silver and gold derivative markets by a small cadre of commercial traders. And it goes and lists exactly what we've been talking about forever: the concentrated short position, the market structure, silver's such a small market, disconnect between physical and paper markets. It makes a pretty good case that we've all been making. Historical evidence. There have been multiple instances where major banks faced regulatory scrutiny and fines for manipulating precious metals. For example, in 2020, J.P. Morgan Chase agreed to a $920 million fine over alleged spoofing in precious metals market. Spoofing involves placing large orders, blah, blah, blah. It wasn't just J.P. Morgan. There was about 10 banks that were charged, or about 5 banks that were charged for rigging the gold and silver market. Colluding. They never charged each other for colluding, even though they have all the emails, and we've seen all the emails. The economic incentives and motivation, protecting the dollar strength. Gold and silver prices inversely correlate to the perceived strength of fiat currencies, particularly the U.S. dollar. Rising gold and silver prices sometimes viewed as signaling the loss of confidence in fiat money. Suppressing the silver price along with gold is seen by some as a part of a larger strategy to maintain dollar strength. Absolutely. That's why the government's involved. Commercial traders accused of manipulation often hold long-term positions that can yield substantial profits if prices are kept low. And then the divergence from historical ratios. Historically, the gold-silver ratio has averaged about 15 to 1 to 20 to 1, reflecting both availability in the Earth's crust and traditionally the relative price stability between the two metals. The current ratio, far exceeding its historical norm, raises questions for those skeptical of market integrity. If the ratio more closely mirrored actual availability and utility, it would likely be closer to its historical benchmarks. And then I said, thank you. New question. If major derivative exchanges for gold and silver will be shut down, how could we come to a reliable price for buying gold and silver? If major exchanges are shut down, the market would need alternative mechanisms. And the first thing it says is physical-only spot markets. In the absence of derivative exchanges, dedicated spot markets for physical metal, like the LBMA for gold, could take on a more central role for price discovery. But I'm like, that can't be right. And then it talks about auction-based pricing, the London Gold Fix again, peer-to-peer decentralized platforms, dealer networks, supply chain reporting transparency, metal-backed digital currencies, all the stuff that we know about. Direct contacts with mints and refiners, reference prices from physical ETFs. And I said, isn't the LBMA a derivative exchange as well, trading over 100x the amount of underlying metal? And ChatGPT says, yes, you are correct. The LBMA operates largely as an over-the-counter market with substantial trading of unallocated gold and silver, where the physical metal backing these transactions is limited compared to the volume of contracts traded. This unallocated trading can indeed resemble derivative markets in practice. That's what they are. High volumes. Pretty interesting stuff. Go on ChatGPT and ask your questions. Basically, they said, yeah, the silver-gold ratio for everything other than current price, screams 6-to-1, 5-to-1, 4-to-1, 1-to-1, screams it, and it's going there. It will take the shutting down of the COMEX, which I think is coming. It might be a small part of the bigger picture of what's going on. Anyway, a customer pointed out that the Pension Benefit Guaranty Corporation just bailed out 4 pension companies with more and more money on November 1st, just a couple of days ago. Nobody seems to be talking about this. It was close to a little over $1 billion, and they have $40 billion. But the problem, here's what they have right here, of $44.6 billion. This is for all the pensions in the United States. I'm like, well, okay, if you have $44 billion to bail people out, and the pension companies are going to be lining up. They already are lining up. They just did 4. How big is the pension market right here? It's at $6 trillion. So I did the calculation. The Pension Guaranty Corporation right here, the Pension Benefit Guaranty Corporation, currently has reserves of 0.006% of what they insure. Not even 1%, about half of 1% of what they insure. So what would it take for a hiccup to destroy all pensions? That's all it would take. The pension guarantee would be gone. And I think it will be very soon. Anyway, that's what I got for you. Again, oh, by the way, I'm talking to Jenny Moonstone today, the day before the election. For private road members, go check out our last discussion, election interruption, secret silver agreements, reanalyzing a silver remote viewing. Go check that out on the private road at roadtoroota.com. I'm talking to Jenny today about what's going to happen over the next couple of weeks and tomorrow. So it'll be really cool. Go to roadtoroota.com if you want to subscribe and get access to all that stuff. There's a zillion videos. Click on subscribe today. We're currently giving away 10 Theta, 100 Theta fuel, and 1,000 T-drop. Load it on a paper wallet. Send to your address, stick it in your safe with your silver, and then pull it out a year or 2 from now, and you will be shocked. Shocking, I tell you. The future of the internet has to implement Theta, the Theta Edge node, if we are going to expand to the levels needed. That's why they're suppressing the price of Theta. It is too big to be. That's why it's not on Coinbase either. It's too big to put anywhere other than hanging on to it. And don't show anybody what's going on, because the big guys are in there. Google, Samsung, Sony, all the big guys are in there, and they know exactly what's about to happen. So they're keeping the price down, but you can get your hands on it. Go to Simple Swap. You can swap it not in most cryptos for Theta. I'm more biased at Theta Fuel right now, mainly because Theta Fuel is the transactional currency of the Theta protocol, and it's currently at, again, there's a Theta Fuel to Theta ratio. I think it's at 6-to-1 right now, somewhere around there, and the price ratio is off. It's at 21-to-1. So I think you'll do 4 times as well with getting T Fuel instead of Theta, believe it or not. Just potentially. And, oh, by the way, you can stake it and earn 7%. 7% on your crypto. You get 7% more Theta by staking. All right? That's what I got for you. This is Bix Weir. I'll talk to you later.